joining us now is Euan Rellie, the co-founder and senior managing director of Business Development Asia. Thank you so much for being here, Euan.
Thank you for having me.
Can you please give us a little background into your firm and the types of transactions you guys deal with?
Sure. I co-founded BDA 17 years ago, and today we have got 80 professionals spread mostly around Asia. Half of our staff are in China, and we work on cross-border deals, both Western companies investing in Asia and the reverse.
17 years, night and day, from when you started the
company?
company?
Not every night and every day, but yes.
Okay, can you talk to us a little bit about the AgFeed transaction
Sure.
and your role in that?
Sure, we were very pleased to be hired by AgFeed when it was going through a fairly difficult time. AgFeed was an unusual company in that it combined businesses in China and the US, quite strong businesses in each place, but it didn't have enough funding really to succeed. And we were brought in to find new partners for AgFeed. During the period that we were working for AgFeed, the company really got into trouble and desperately needed funding. And we ended up shepherding the company through a bankruptcy process and Section 363 sales. We sold the Chinese business to a Chinese buyer, and we sold the US businesses to a consortium of US buyers. So it was a good outcome for the shareholders in the end.
It was really uncharted territory. What would you say were the major hurdles that you faced, particularly dealing with China?
Well, luckily the risk tolerance of Chinese investors is high today. The Chinese half of AgFeed was really struggling from, frankly, poor management and systematic fraud in the company, which had resulted in a turnover of management. And that meant that it was quite difficult for us in the beginning to figure out exactly what assets were there, let alone what they were worth. But we were lucky in finding some Chinese bidders who were quite keen to buy the company, who knew the business reasonably well, and who felt that they would be able to fix the business in a way that the previous Western owners had failed to do.
The industry really stood up and took notice of this transaction because it was so fascinating. What would you say was learned from this? Would other companies learn from this, and how it may affect other transactions moving forward?
Well, the first thing is that Chinese bidders are here to stay, and Chinese bidders will participate in an auction today wherever it is in the world, whether in the West or in China. They will pay up, they've got access to cheap capital, and they've got that kind of swagger, I think, which CEOs in the US are maybe missing a little bit at the moment. So Chinese have a very high tolerance for taking risk today, and I think we're going to see a lot of Chinese bidders winning auctions around the world over the next couple of years.
What do you mean by that swagger that they have?
I think with the downturn in the US, the prime focus for CEOs in this market has been caution, preserving the business, preserving their jobs, frankly, and keeping their businesses intact. Whereas I think in China there's a confidence about building globally, which I've never seen in my career. I've devoted 25 years of my career to the coming Asian M&A boom, and it's here today. So it's very exciting. We saw $70 billion of outbound Chinese M&A activity last year, which is a record.
Unbelievable.
And just based on the business that we're doing in my firm alone, we can have some confidence that number's going to grow.
Okay, if we could speak generally now, the rest of 2014,
Yes.
What do you see as the forecast for the rest of distressed investing in 2014?
Well, distressed investors are a funny bunch of people. They like it when there's bad news around, because that means they get to buy stuff cheaply. And actually the economic recovery has been bad for the distressed market, perversely, because it's been good for the underlying economy. And I think the question, which I'm not in a good position, frankly, to predict, but sooner or later we know that interest rates will go up in this country, and a lot of US companies have thrived and kept afloat by taking advantage of cheap borrowing. And the moment that changes, I think the market for distressed investing will step up very quickly, because I think some of those companies will not do as well when interest rates start going up.
So you would compare this year then to pretty much last year, 2013?
I think it should improve at some point during this year for distressed investing. I think there's been a little cycle of stability, which I don't think will hold necessarily indefinitely.
Euan, so great to talk to you.
Thanks.
Thank you
Thank
so
you
much for your
very much
insight.
for your time.
Appreciate it.
Appreciate it.
Oh, your mic.